What's going on, everyone? Quick update today. It is Tuesday at 10 o'clock at night. We had a gold rally recovery of $103.60 today. Just got the call with John and Elijah on their space. Great space today. Tropical Trader was the guest speaker. Fantastic job. Some quick things today. We had a lot of shifting from, more tech sell-off into things like staples, the Costco's of the world, the Procter and Gamble's of the world, more safety. And I think it had a lot to do with, this didn't really come out like publicly. There was no big news announcement about it. Friday, there was supposed to be the revision of the jobs data from 2025 that was released, and the January numbers due to the partial government shutdown, which lasted, throughout the weekend. It's crap, to be honest with you. They completely canceled Friday's meeting. This happened at around noon today. At least that was the earliest I could see that it was announced. So we won't get the revision of the jobs report, 2025 unemployment numbers. None of it. Led to a big sell-off, rotation out of the market, even though everything was, the Senate approved the new spending bill, Treasury issued, I think it was like a couple $100 billion in treasuries to be sold, to be liquidated in the public market, I believe by Friday. I talked to my silver dealer. This is the metals section. I called my silver dealer today. Guy I've known since 2012, since I was trading physical. Said like, hey, what's going on? How are you pricing things out? He goes, look, I'll be honest with you, things aren't that good. He is offering, and people are selling 20% off spot, and that's a lot. In the past, when I've dealt with him, it was always about 5%. And the reason for the 20% is because he's having to hold on to it. The refineries have so much supply right now. It's backlogged, and they don't have enough people to like melt it all down, make it into, to make it into coins, to make it into blocks, kilo bars. They have an oversupply right now. I would be cautious going into the silver future market this week until supply catches up. I'm just telling you guys, there's a way oversupply right now, and I don't think it's been properly priced into the market. If the refineries are not taking anymore because they have too much, that's an issue, okay? But again, gold rallied today, which is great. We had our first bank closure of 2026. That was Chicago's Capital Bank, first bank. The FDIC did have to step in and save them. So they did save all the creditors' deposit. Wasn't a huge bank, but it's still first bank of 2026. We saw in 2025, there was a ton of banks that closed. When you see one cockroach, there's probably more. Famous saying, you guys all know what I'm talking about from last year when we had all those collapses. And then in the crypto market, again, I'm just restating what I already said on, John and Elijah's space tonight, which you guys should go back and watch. Great time. They're excellent hosts. With the crypto market, there's been an issue with, you guys remember the Genius Act passed in 2025. All good, great, whatever. Part of the Genius Act was that is a compromise. If you held USDC just in, say, like a Coinbase wallet or a Binance wallet, you were getting interest on it. I believe the interest on it before was like, it was almost 3.5%. It was pretty decent. And that's because USDC owns, 0 to 3 month treasuries. Now, USDC is owned by Circle. Circle's owned by BlackRock. So we really have, we have the top people involved in this. It's the first time I've ever, I think, publicly said this. I'm actually rooting for BlackRock. I probably will never say that again, but who knows? I hope they step in and put an end to this. The Senate came out last week and said that they want to revise that. There's a section in the Genius Act. It's 404 of the Genius Act, and they want to revise it. So what's going on is right now you can't collect interest on your stable coins, USDC and the Tether. You can't collect interest. That was part of the deal to get the Genius Act pushed through. Okay, but there was a loophole that there was a secondary market which you could, and that is what happens when you stake your crypto. Everyone's heard of staking crypto. You still get paid out, la-di-da-di-da, whatever. The Senate is basically saying, like, we got to put an end to this. And I'll tell you why. $6.6 trillion has been liquidated out of banks and sent into stablecoins. $6.6 trillion is being held in stablecoins right now. That is a lot. That is a substantial amount. 6.6 trillion. That is it's like 2.5 of the Mag 7 companies. But think of the largest ones. I don't know, NVIDIA, and put NVIDIA and Google together, their market caps. And that's essentially what's been liquidated out of the banks and put into stablecoins. The banks are trying to put an end to this. The Senate's pushing to end this secondary market. Who knows what happens from there, but we've seen a big sell-off because of it. Again, did it break the news, public news? No, that's what I'm telling you. Hopefully, hopefully BlackRock's CEO steps in and squashes this, because obviously we know that BlackRock is the largest asset manager in the world. So that is your update. And let me see. NVIDIA AI chips sales to China halted by U.S. security review. I saw a bunch of stuff that the reason for the sell-off today and the move to out of tech into safety was because the U.S. took out some drones from Iran. Okay, you wouldn't see hundreds of billions of dollars getting moved around in the markets because of a drone getting taken out of the sky. No one cares. It's just news. It really had to do with government data report not coming out for Friday. That sucks. It's kind of like a kick in the teeth, because then we don't know. I mean, that's huge, right? That means we don't know where interest rates are going to get priced in for February's FOMC. That's a huge interest. That's a huge issue, because it's uncertainty, and the market doesn't like uncertainty. We like clear direction. Now, again, temporary. This is entirely temporary. The government just reopened, or the Senate passed the bill. The House approved the bill. It got sent to Trump's office to sign. The government reopened. That just means they're going to print off more money. Treasury already issued out the debt payments to be sold off in the public market, again by Friday. Short-term liquidity. All of this liquidity ends up going into the market, pushing asset prices higher. Long-term, zoom out. This is just noise. Don't worry about it. And that's it.
Return on cash, where macro meets more as the power of the market. Elevate your returns.